You will have mortgage insurance for a minimum of 5 years, regardless of how much you put down as a down payment. So say you put 20% down on your FHA loans, you still will have mortgage insurance for a minimum of 5 years. That's definitely a disadvantage. At the 5-year mark, your mortgage insurance, your monthly mortgage insurance will be removed if you have 22% equity in your property. You do not have to refinance to get rid of it. At the 5-year mark, if you have 22% equity, it drops off. Now remember that upfront mortgage insurance premium, that's not refunded to you, but what you're eliminating is the monthly mortgage insurance that you're paying. Mortgage insurance as of January 2007 is tax deductible, but you do need to check in with your accountant just because laws change, and it is based off of what your income is and who qualifies for that. So it was actually quite aggressive, I thought. So just check in with your accountant and verify whether or not you can deduct your mortgage insurance that you pay just like you do your interest. With more money down or a shorter term loan, that monthly mortgage insurance calculation can be decreased. So say you wanted to put 10% down and do a 15-year loan, that monthly mortgage insurance can decrease drastically, but it won't be eliminated. You could refinance out of your FHA loan into a conventional loan. The reason you would want to do this is, say you're at the 3-year mark and you've got 20% equity. Well, you could refinance out of your FHA loan into a conventional loan and eliminate mortgage insurance, but just, when considering that as an option, just know that anytime you refinance, you're subject to current market interest rates. The rates could be higher, so that is a risk if you're planning on doing that scenario. Let's look at a total monthly payment. The reason I'm passionate about this is because so many mortgage calculators online do not calculate the monthly payment accurately, so I want you to see what goes into your total monthly payment because you don't want to have shock of what to expect from a monthly perspective. So based off of your purchase price of $200,000, total loan amount is $194,930 at 4.25% interest rate on a 30-year fixed. Now, rates have been all over the place. This is not a accurate market quote. This is just for educational purposes. So your principal and interest is $958. Mortgage insurance, remember we did that calculation, that's $184. Taxes based on the local Denver market would be right around $180. Home insurance, again, estimate right around $65 a month. So your total monthly payment is $1,387. Now, if you have HOAs on a property, that is not that's not included in this calculation, but you will want to include that in when you're figuring out your budget. But this is how you want to calculate the total monthly payment. So loan limits per county. So let me walk you through how to look this up. So remember I told you some people consider this a disadvantage of FHA. Well, let's go check it out. So HUD, actually come up here and we're going to go to HUD.gov. We're going to go to resources, FHA mortgage limits, and you can search by state, county. So let's just search on Colorado. All of Colorado's counties are in here with their FHA lending limit. So for instance, Denver, the whole Denver area, Adams, all of that stuff is going to be 406,250. So you've got Adams County, Jefferson County, Denver County, all of them in this area are 406,250 for a 1-unit property. If you're buying a duplex, you could go up to 520,000. Triplex is 628,000. A fourplex is 781,000. This is a big deal. Now keep in mind if you get into resort areas, these are higher. If you get into areas where the median income is lower, these will be lower. So, but this is a great place to go to look this information up. So HUD.gov. Back over to our presentation. Types of FHA loans. There's 3 types of FHA loans. The 203B with escrows, and a 203K. most people think there's only one type of FHA loan, and most people are just familiar with the 203B because most banks have chose to offer just this program within FHA. The 203B is just your simple 3.5% down. Property needs to be in good condition when you close, no health and safety issues. 203B with escrows gives you the ability that if you have any sort of repairs that need to bring up your house to health and safety standards per FHA, you can set up an escrow account up to $5,000. So say the bank's requiring you to fix the water heater before you can close, you could do a 203B with an escrow, anything for health and safety. The 203K is a phenomenal program, and I encourage you, if you're looking to buy, you need to know more about this. You can do this as a refinance too, but the 203K program is very little known because very, very few banks have chosen to offer this program. It is a program that gives you the ability to buy and fix up a house all in one loan with your 3.5% down. Now, why this is amazing is because you could repair a house, you could update a house. All the work starts after you buy the house with the money set aside by the bank. So say you find a house, you hate the kitchen, you want to redo it, 203K loan. Say you want to build an addition, 203K loan. You want to build a garage, 203K loan. If you wanted to scrape the house and rebuild it, you could do a 203K loan. So everything from rolling in, maybe because you hate the appliances that are in there, you want to put in new appliances, flooring, you want to redo the kitchen, any of that stuff can be done through your 203K loan. Now, I will show you here in a second where to go for more information. If you do anything, make sure you learn about this program. Phenomenal program. Let's go on. Let's go on to the frequently asked questions. FHA loans are not just for first-time home buyers. Anybody could use a FHA loan. There is no income restrictions. You could make $2 million a year and still qualify for an FHA loan. Down payment, minimum is 3.5%, but where that money comes from, again, can be a gift from a family member, or you could receive down payment assistance from a county, state, national program. Property condition, remember, it does not have to be perfect. A lot of people think it will not close if it's in poor condition. If you have a 203K loan, I don't care if you had a property barely standing up because it's leaning up to like a lean-to, you could close that property. So a lot of people think that you do have to have a perfect condition property, and that's just not the case at all. In fact, a lot of the properties you're finding now with foreclosures, bank-owned, they're far from perfect. So you're going to want to do that 203K program. You can have co-signers with FHA loans if you don't have enough income to qualify. You could have a credit score down to 580 and still get an FHA loan. Loan type and terms, 30-year fixed is what most people do, but you do have a 15-year fixed option, as well as there are ARM programs with FHA. There are no prepayment penalties. That's a really good question to ask anytime you're getting a loan. Do I have to be in the same job for 2 years? No. And what documentation is needed to qualify? You guys would be so surprised at how easy it is to get an FHA loan. W-2s, if you have them, pay stubs, tax returns, we walk you through. If you've lost your stuff, we'll give you ways to get it. Getting pre-approved for an FHA loan is super, super easy.